day, everybody. My name is David Marsh. I'm the chairman of OMFIF, and I'm here to do a kind of recap of the conference that we held with the Scotiabank in October to talk about some of the big themes with two of the most distinguished economists who were speaking there. One is Bill White, former Deputy Governor of the Bank of Canada, and many other things beside. He's had very serious positions at the OECD and the Bank for International Settlements in the past. He's now a fellow at CD Howe in Toronto. And then Jean-François Perrault, who's the chief economist at Scotiabank. Both of them played a pretty active role in the conference that we had, which was skirting over the main themes in the world economy, looking forward to 2021 after what's been a very unusual and rather dire 2020. Bill, you presented a paper at the conference, which I think has had worldwide circulation, about what you call the preordained conditions that were assailing the world economy, making it even more difficult to get out of the mess that we are in now. I'd like to start off with you, Bill, but I'd like to address in our relatively short space of time here two big questions. One is a trap that maybe the central banks are walking into because of keeping interest rates too low for the time being and not being able to put them up at some later stage. And then the other question is trust. That came up also in your paper, Bill, loss of trust within nations and between nations. First of all, though, clearly, as the Irish saying goes, we wouldn't start from here. But since we have started from here, what are the big hurdles we have to overcome, and how likely is it that we're going to be able to overcome them?
Well, I think you've framed it quite appropriately. I mean, we have a problem, and one of the problems is this debt trap that you just referred to. And we have other problems, of course, environmental problems, the problem of the pandemic, et cetera, et cetera. Many of these were sort of baked in before the pandemic arrived, so the patient had preconditions. But where the trust comes in is we have a problem and we need a solution. And the solution, as always, has got to be a political solution. You know, the great economist Schumpeter was once asked, what's the essence of economics? And he said, politics, politics, politics. And the essence of getting a political solution is trust. And if you don't have that kind of trust, and increasingly as I look around the world, I see that I suspect that it's not there, then we have, as it were, another problem, because there's no political solution to the problems that face us.
We'll go into this issue about politics in a moment, but Jean-François, this question about the central banks. At the moment, interest rates are negative or zero. In many, many countries, bond rates are very low or negative. This is all an attempt to encourage people to buy more risky assets. Clearly, governments are using this to issue a great deal in North America, in Europe, all over the world, and at a rate which actually doesn't cause any pain. However, the pain will come if rates go up. Will central banks be able to raise rates, or will they be so opposed by the politicians that they'll be put back in their box, and central banks are therefore on the way to losing their prized independence? Is that a trap that you find serious and worrisome?
It depends it depends on the institutional environment which central bank is operating. So for some central banks, like Canada's, for instance, and I would argue the ECB to some extent, the Fed, although that's really been blurred under the Trump administration, those central banks, I think, are their mandates are pretty well established, and I think they've got enough independence to. Or my sense is that their independence is not yet in question. I don't think will be in question. In Canada, the governor of the Bank of Canada has talked about that a couple of times already, because there is this sense out there that finance ministries, finance officials have co-opted central banks in terms of achieving using the current circumstances to advance political agendas. And in fact, in Canada, we have a member of the opposition who's very explicitly made that link in the Canadian context. I think the safeguard there is kind of the sanctity of the central bank mandate. And I think, unless you fear an inflationary spike, which is possible, as you know, money supply is rising and there are supply shocks operating, but unless you fear a dramatic increase in inflationary pressures, I don't know that there's going to be this tension that some fear at this point in time. it's clearly a risk. There's no question about it, and it's a risk that wasn't in place, 9 months ago. So the environment is a little bit different, but I do have faith that the legal mandates of the central banks are going to allow them to do what it is that they need to do to ensure, attainment of their objective, whatever that might be.
I remember, like you do, James Baker, who said about Helmut Schlesinger that he saw inflation under every stone. Is it right or wrong to think that the inflationary worries should be put into the box because they're just not at all likely to bother us for the next 5 or 6 years?
I'd like to contradict myself, and not for the first time in my life. Let me say that I think Jean-François is right in talking about the politics of central bank independence and the trap. But what I'm actually worried about is the economics of the debt trap. And what I really mean by that is that we have had so many decades of very easy monetary policy, not least during this last decade, that has induced people to take on debts at a rate and to a level that we have never seen before. And the real problem with the central banks at the moment is that they're confronted with all of these companies, say nothing of the governments, but all of these companies, particularly in the United States, but many other countries as well, that are absolutely leveraged up to the eyeballs. They've taken out loans that are covenant light so that the amount you're going to retrieve when the loans goes bad is basically nothing. So the debt trap really comes from they can't raise the rates regardless, because if they do so, they're going to bankrupt so many people that they'll push the country into an even deeper recession. And I frankly have been warning about this bad path that we've been on for almost 2 decades. And of course, the pandemic and the debt associated with the pandemic has made that fundamental trap that the central bankers have set for themselves even deeper than it was before.
When people are dying, I mean, that's another cold fact, isn't it? That if anybody wanted to think about tightening, say in Europe, you could do that if you've had 2 quarters of really consistent growth and you're closing the output gap and the epidemic has died down, but you can't actually. So that's another thing. But coming back to Canada, Jean-François, in our conference, there was a particularly interesting panel on monetary financing. And the question was whether central banks are doing monetary financing. Andrew Bailey of the Bank of England has said he doesn't think that is the case because he says that there's not fiscal dominance at the moment. It seems to me as though there is fiscal dominance because the fiscal authorities can issue almost everything they like in the full knowledge that the central bank is going to hoover it all up. Do you think Canada, in this particular regard, is guilty of going down a monetary financing path?
Well, I mean, there's no question that we are, right? Just as is the case in other countries. I think the challenge with that assertion is that there's an implicit downside to that. Right. I mean, like it's a simple reality. I mean, we know governments have been issuing lots of debt that's required in current circumstances. Clearly, central banks are buying up a lot of that. You're seeing money growth explode in a range of countries. Canada is obviously one of these cases, but fantastically strong rates of monetary aggregate growth. And we know that historically there has been an association between rates of expansion, the money supply, and inflation. It's come and gone over time, but there's the simple reality as we think about it now in terms of kind of this trade-off that we're playing is even if you think there's a very small weight on the role of money in the inflation determination process, the numbers that we're dealing with are so large relative to history that there's likely to be kind of an inflationary consequence of that. And I think from a central bank perspective, that's arguably a little bit more of an important consideration than this idea. I don't subscribe to the idea of fiscal dominance at this point in time, largely for those reasons that the central bank is doing what it is that it needs to do, at least in its eyes, to achieve its inflation objective. And I think this is generally true across the world with well-established central banks. And so I don't think that there's cause to question whether or not central banks have been co-opted through this and whether or not finance ministries are taking advantage of the central banks because they're, in the short run, at the very least, for the next probably year, or maybe a little bit longer, those incentives are squarely aligned, right? Doing what's right by inflation means, basically what the government's doing, and likewise, the central banks are doing what they believe to be necessary to control inflation, or bring inflation back to target in a lot of cases. So that to me is not an issue at this point in time, so long as inflation remains, so long as we have a good understanding of inflation and that it remains below target, and that obviously is a question for the future if that remains in place or not.
But to Bill, you're famous for looking across the scenery, looking across the next hilltop. When will be the moment of truth?
Well, it's the honest truth is it is impossible to say. I think the near-term pressures, as Jean-François rightly suggested, are likely to be in a disinflationary direction. Having said that, I think some of the underlying structural problems that we face indicate that going forward, growth is going to shift down. We've had reductions already in total factor productivity. We're going to have a big swing globally in terms of demographics. We're going to have to deal with the problems of adapting to climate change. Globalization is going into reverse. All of these things are going to lead to slower growth in the economy. And some of them might actually lead to inflationary pressures as well. And I guess my concern would be that faced with the slow growth by historical standards, even as inflation starts to rise, that the central banks will temporize with it. And I mean, the Fed's latest change in operating, the way that they're doing things at the moment is a clear statement that they're going to put all of the emphasis on maximum employment, and inflation control is going to be second fiddle. So I think if these pressures, inflationary pressures, come back, I think that the central banks will basically say a little bit of it is okay. It's just the price level is going back up to where it was before. What's wrong with that? But the real question is whether the process can be controllable. And I think, Jean-François, you made reference to the fact we have to understand the inflation process. Fact is, we don't understand the inflation process. And even Jay Powell has said this publicly. The Phillips curve is not so sure what's driving what, globalization versus national forces. So I think that this thing could very easily get out of control. And we have seen this, of course, against the backdrop of heavy, heavy debts and banks that are in trouble. We've seen this so many times before. So just because it might be a relatively low probability event, I would think it would be a low probability event with a big cost if it occurs. And we should be wary going forward of our capacity to resist adequately those inflationary forces that might be coming out of these structural changes that I've just talked about.
Yes, it's vaguely comforting, isn't it, in a ghoulish sort of way, to know that we've been here before and they're always likely to strike again. Just while we're still talking, this question of trust now, Jean-François, is it more important to have trust in the central bank or trust in the politicians, or is it the same? Because when people have got a lot to worry about, as they do, are they really going to worry about the background record of the central bank governor? They're going to probably worry more about the prime minister or the president or the elected politicians. Are the central banks at the moment a little bit out of the firing line because they're covered by the politics? And that brings us to, who would you trust then if you're looking around the world at the moment? If you're an ordinary citizen in whatever country, is it based on who's done best in combating the pandemic? Is that where trust comes from in the short term?
I think so. I mean, if you look at polling across countries, and you find pretty compelling evidence of that, right? Governments that have, seem to have managed the virus reasonably well up until a couple of weeks ago, 3 weeks ago, depending on the country you're in, those governments have generally had, pretty clearly advantageous polling in the sense that their population is trusting them more than they used to. I think the way to think about the trust issue in this context is, just who can do more for you. All right. If you're somebody who's unemployed, if you're a business who's struggling, central bank is not going to save your back. Right. The central bank's brought rates as low as they're going to go. They're doing quantitative easing, they're doing a range of things. But for the vast majority of economic agents, it's the fiscal authority that has a much greater sway over their future and their ability to manage the current situation. So I think in that sense, you need to be able to have a lot more trust in, there's a requirement for there to be more trust on the part of the political side. And some countries I think have done that reasonably well. Others, including I think in the United States, are struggling a little bit more on that side. But I think I would argue there's a pretty compelling narrative that the more trust there is in the government's ability to ride this out in the right way, the less damaging the economic impacts of the virus are likely to be. And for instance, we're seeing some of this in Canada to some extent. I don't want to keep talking about Canada, but if you look at the employment outcomes in Canada relative to the Americans, employment has come back more rapidly here than it has down south, even though the shock was much bigger in Canada than it was in the U.S. So that speaks to business confidence and their to some extent, and the extent to which they feel like the government is doing what they can to keep them afloat for as long as possible. Now that's got some challenges and implications as well, going back to Bill's earlier points on structural change and how fast we need to do things, and keeping firms afloat that might not need to be afloat, might not or should not be afloat. But certainly, you look at measures of business confidence, generally speaking, around the world, and they're remarkably strong given how historic the shock that we're dealing with is.
Well, just looking ahead now for the next 12 months as we wrap up, I do hope that we'll be meeting again for another one of these conferences in the fall of 2021. I would like to ask both of you, gentlemen, what do you think is going to help us to bridge the gap? When this pandemic started in February, March, people were talking about measures to bridge the gap between maybe March and September. Well, we're likely to see a lot more need for a bridge that goes a bit further than that. What do we need, Bill, to get us from here to there? And also, what are you going to be looking out for just in terms of trigger points in the next 12 months, either from an investor point of view or from a political, economic point of view? What are you going to be looking for that gives you either a glow of good fortune or a shiver of apprehension?
I think there's so many different dimensions to what's on the other side of the bridge, but let's just sort of talk about the economic side of it. And I think what I'm concerned about is that the current central banks have dealt with what was a liquidity crisis of sorts, both in the financial markets and more broadly. But we don't just face a liquidity crisis. Jean-François made reference to zombies. We face a solvency crisis. There are many, many companies out there, and for that matter, many, many countries that are not going to make it without debt restructuring. And the difficulties that we're going to face really have to do with politics and the administrative and judicial infrastructure that is there to allow us to get orderly debt resolution as opposed to disorderly debt resolution. And so I'm going to be looking at those sorts of things. And I think in the first instance, and I'll be frank here, my biggest worry is really with the developing countries and the debts that they have laid on even before the pandemic. There's been a huge expansion in debt on the part of emerging market economies. And many of the sovereigns, particularly the poorest ones, are facing great difficulties. And the numbers are large. The numbers are large. So I'll be watching how that resolves itself to see whether we're going to get the disorderly solution, which will be extremely costly, both economic and politically, or whether we're going to get the orderly resolution of the debt and then the opening up, as it were, of the debt trap, because the debt will have been resolved. So there's two ways that we can go, but the debt is absolutely at the center of it and how we deal with that debt problem.
Well, thank you, Bill. Cheerfully lugubrious as ever. Jean-François, what would be your reply to that question?
I would note a couple of things. I mean, clearly there's a U.S. election. I guess we'll know the result by the time this airs. But one of the challenges I think we faced internationally has been, in contrast a little bit to the great financial crisis, is much less coordination of policies. And it speaks somewhat to the point that Bill just made. Much less coordination of policy internationally, right? So our individual firepower has been limited by the fact that we're all kind of reacting to this as best we see fit, but not necessarily in a way that maximizes the reasonably limited amount of firepower that we thought we had going into this. So the evolution of kind of the international dialogue and how collaborative we are in terms of trying to redress some of the wrongs that are currently afflicting us, I think will be important. The other thing, and this is something I'm a little bit more optimistic on, not that I'm not optimistic on the collaboration side, but one of the things that has, I think, gelled in people's minds globally in relation to the pandemic is, it's really brought to the forefront this issue of inequality, right? Equality of opportunity or of outcomes, however you want to define it. But there clearly is, as you look at labor market outcomes across the world, there are parts of the system that have been absolutely decimated, and those tend to be the less well off. And as we kind of work our way through this, I'm optimistic that some of the policy solutions that will flow from the lessons that we have learned will effectively prioritize, income inequality or equality of opportunity a little bit more than we've been able to in the past. And if we can do that, I think that goes to some distance in, raising kind of medium-term growth potential, or doing that in a way that is more conducive to longer-term growth potential than the settings that we had, if you will, going into this.
Well, thank you both of you for summing up also some of the themes that we had at the Scotiabank OMFIF conference. I'm absolutely sure that what you said here about inequality is now crucial, and it's amazing to me how many central bankers have been picking that up in the last 24 months. It's a sign, I think, of all these political, social, economic issues now crowding into monetary policy making. So there's no easy answers. That's what both of you have said. I would recommend people to read Bill's paper. It doesn't point forward to a very rosy outlook, but it does set some touchstones, I think, for how we might be able to survive and prosper with a new sustainable policy. So I recommend everybody to do that. Keep reading Jean-François Perrault as well at the Scotiabank. Thank you both very much indeed for recapping on some of the major points at the conference. I look forward to recapping on many other things with you both in the future. So this is David Marsh saying goodbye for now, and thank you very much, Bill White and Jean-François Perrault. Over and out, and good day to you all wherever you are.